What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. We are 10 days away from the Q1 2025 earnings. And even though we got a lot of macro volatility right now around tariffs, I don't think you should be completely focusing in on tariffs. It's just a matter of time before tariffs completely blow over and deals are made or the tariffs are backed off. Whatever it is, okay? You can't control the macro. Follow Peter Lynch. Don't spend more than 10 minutes on macro environment. Just look for companies out there that are going to have magnificent growth and trading at a discount. That's all you should be worried about, because if you're not inside of the market, when a trade deal gets announced or tariffs are completely, taken off the table, whatever it is, you're going to miss a 5 to 10% pop on an index out of nowhere. And then you're going to be chasing other stocks that are going to be going up 20, 25% on that type of news. So stay inside of the markets and just look for opportunity, okay? That's the best thing you should be doing right now if you're a long-term investor, okay? This macro uncertainty will blow over. This is nothing like 2020. This is nothing like, 2022 when we had, 10 rate hikes. This is completely different, okay? This is just uncertainty inside of the market, okay? But understand, I believe the management team for SoFi is not going to see a slowdown. Even if we have a recession, there is just so much market share for the taking right now. I believe SoFi is going to grow absolutely insane this year, 30% plus. And I just believe SoFi is just ready for this 2025 with so many different diversified revenue streams are going to be coming in. And I believe Anthony Noto has finally listened to the bears. Okay. You continuously get these $4, $5, $6 from a Wedbush, from a KBW, from a Compass Point. I believe Anthony Noto has finally said, hey, the Bears are right, okay? He has finally said the Bears are right, and he is taking the Bears' insight on these price targets, because every single summary they do is the exact same headline. Risk of, loans collapsing, default risk, balance sheet imploding. It's just the same thing over and over again. And even though they executed the last 4 years, it will not change those guys' opinions. So why don't we get those guys' opinions to finally flip? How do you do that? Okay. You lower the risk, you drop the risk. How do you do that? You add in the loan platform business, zero risk to the balance sheet. You even put out a statement saying, hey, we are, fully up for, switching our entire lending over to the loan platform business, no risk to the balance sheet. Okay. So they have finally listened to the Bears. And guess what? It's time for the Bears to finally flip, because they have got what they want. And if they don't flip, that means, it's complete manipulation, garbage, insider, shorting to get this stock to collapse. Okay. So the management team on SoFi has finally listened to the Bears, and that's why the loan platform business, I believe, is going to skyrocket to levels that we couldn't imagine. Okay. You see a company like Upstart back in 2021, get a valuation out of this world when you saw their originations on their loan platform, skyrocket to all-time highs officially. And then, of course, we got the macro pullback, and then we got, rate hikes for the next year, year and a half, which caused them to really slow back on their originations. But Upstart has proven that the business model does work in getting a premium valuation off that fee-based revenue, no risk to the balance sheet, connecting partners with high-quality loans, using automated underwriting, AI lending. I'm telling you right now, this is where SoFi is headed inside of 2025, and it is massive amounts of loan platform originations. And I'm going to show you guys what type of valuations that we could potentially be seeing, inside of 2025. It's going to absolutely blow your mind. And I believe the Bears, they might not flip dramatically to where we have 5, 6 analysts right now at $20, but they may flip their 4, 5s, and 6s, to 9s, 10s, and $12 price targets, which is fair enough, because we'll have other analysts on the bullish side, come up to the, higher mid $20 levels or so. So guys, it's a very exciting video. This is going to be a very exciting earnings for you guys, Q1 2025. SoFi has had brand awareness explode to all-time highs, and they have shifted their business to lower risk, with the loan platform. I'm very excited. So be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We'll be keeping you guys updated daily. Let's get into the video. All right, once again, guys, since SoFi got their bank charter license, they have been, growing their assets dramatically. And, they had flawless execution as a bank, growing their assets, increasing their revenue. As you guys can see, they had a ranking of 449 in Q1 2022 at $2 billion in assets, grew it all the way to 57th rank, in America, to 36 billion in assets, and the stock did nothing, just hovered at the same level, $10 4 years ago, $10 today. it just didn't matter at all. Okay. So they tried to get the stock to increase. Of course, they tried their hardest with flawless execution, on banking, just doing, high quality loans, high quality lending. But there's just so many bears out there that are against this model and just continuously saying personal loans are going to explode, the defaults are going to blow up, the balance sheet's going to blow up. It just didn't work. So SoFi, rather than continuing with this business model of putting loans on their balance sheet, but they also had to do this, to just get revenue up, get profits up, to invest in other products. So of course, this is what has gotten SoFi to this level as a company, growing their products, growing their member base, growing their marketing, but it's not going to get the stock price to move. And that's why we have shifted to the loan platform business. So guys, this is flawless execution, but there's too many bears out there and we could not, battle through these bears. It just didn't work. Okay. There's just too many bearish headlines that come out, 10, 20 times a year. We have made this shift, and I'm telling you, this is where SoFi is going to take off to all-time highs. And here it is, guys. Anthony Noto has said, one of the things that we contemplate is, could we push all of our lending into the loan platform business over time? And I'm not opposed to that at all. The economics are very attractive. The velocity is much higher. The capital is lower. You have a lighter balance sheet. It would really support high ROE. Listen, we're students of the industry, and we see what drives high multiples. Boom. He knows that balance sheet growing wasn't working. They figured it out, okay? Even though they grew their business a lot, it's not going to grow the stock a lot. Whether it's revenue or earnings or book value, whatever the multiples will be, it's high ROE. Guys, this is the shift. Management has finally listened to the bears. They have listened to Compass Point. They have listened to Wedbush. They have listened to KBW. And guess what? They're going to fee-based revenue, no risk to the balance sheet, high return. This is it, guys, okay? This is the shift that SoFi is making right now, and you're going to see the stock absolutely explode to all-time highs. And this is it, guys. I do not see SoFi's personal loans slowing down at all in 2025, 2026, or 2027, even though you're hearing about this recession coming out. There's just too much market share up for grabs right now, okay? If we do have a massive recession, sure, SoFi, maybe they grow 15%, okay? They're still growing, okay? Sure, the stock may have, pressure, but guys, the company's not going nowhere, okay? 1.36 trillion market share up for grabs in credit card debt. This is where they're going to refinance that debt, save people money, get people's money right, taking them from interest 20 to 30%, maybe down to 12 to 18%, okay? That is just saving people money, and it's going after a massive amount of market share right now, 1.36 trillion, okay? Now, of course, it's not 1.36 trillion up for grabs for SoFi, because SoFi wants the highest quality prime customer, that they were putting on their balance sheet. And of course, you're going to also get high quality customers for their loan platform business partners, where they're underwriting these loans, getting a fee, shifting it over to their balance sheet right away. But that's not 1.36 trillion up for grabs. You got to realize SoFi right now denies 75% of their loans, so they're only accepting 25%. So if you take 25% on this 1.36 trillion, you're looking at about 400 billion market share credit card debt up for grabs. Okay, so that's 400 billion opportunity that we can go and get. Okay, I'm not saying that SoFi is only going to shift their loans into loan platform business. I think they will still grow their balance sheet a little bit, but I think you're going to see maybe like a 70-80% shift to loan platform business, moving forward, is where they're going to try and head to. So guys, 400 billion market share up for grabs. I think we're going to, get a lot of that over the next, 3 to 6 years, but I don't see any slowdown over the next 3 years. And guys, if you just look at the stock right now, the stock's been doing nothing because we're in macro uncertainty around tariffs. But SoFi, on the other hand, has been closing deals left and right with this loan platform business, no risk to the balance sheet, fee-based revenue, underwriting for their partners, because they've gotten so good at underwriting and they're seeing, such low defaults across the industry. So SoFi secures another 3.2 billion expansion to the loan platform business across agreements with Fortress and Edge Focus, okay? This was a $2 billion extension of its loan platform business agreement managed by affiliates of Fortress Investment Group. So they jumped up from, $2 billion to $5 billion in total. And when they finally made this announcement back in March 13th, about a month ago, that they also announced the $5 billion agreement with Blue Owl Capital Funds. I mean, we were selling off when they made this announcement because the macro was so bad. I mean, the indexes were dropping 3-5% a day. So they tried to, battle the, sell-off inside of the market. It didn't work at all. So this $5 billion agreement right here with Blue Owl literally gave us no premium at all. So guys, you're getting, $10 billion worth of agreements from just two companies, okay? What's going to happen when we land that $10 billion deal or that $7.5 billion deal pretty soon for 2025? Okay, I believe it's going to happen. I believe there's a partner out there that is going to, sign with us. If it's not, Sixth Street or BlackRock, who knows? But I think there's a $7.5 to $10 billion deal out there, and that is when the stock is officially going to crack through all-time highs, that $28 level specifically. But you guys can see $10 billion in closed deals, $18.40 before these deals were announced, and now we're back to $11 with a $10 billion agreement from two companies. Okay, macro uncertainty right now. You can't control it. You can't time it. Stay inside of the markets. Look for value. All right, guys, and if you take a look at Upstart, who is also doing no risk to the balance sheet, automatic AI lending, connecting banks with high quality loans. Look at this, guys. The highest loan origination volume did occur in 2021, with bank partners originating 1.3 million in loans, totaling 11.8 billion on the year. This represented a significant increase of 338% from the previous year. In 2024, Upstart originated 697,000 loans, totaling 5.9 billion. So guys, going from 2021 to 2024, they're still doing half their originations. Okay, that's how good the macro environment was in 2021. Of course, the stock sold off for a year and a half, 2 years, because we had the rate hikes, because this is the time when interest rates were so low. The market share that SoFi has on gaining new members and the market share they already have, okay, I believe there's a chance that SoFi is gonna break through this 11.8 billion originations that Upstart did on their loan platform business inside of 2021. I think SoFi can do that. Maybe not this year in 2025, but hey, maybe 2026 they can get to that level. But guys, you can see we just closed 10 billion in originations, and some of those deals are over 2 years. But guys, look, 10 billion, 11.8 billion. I mean, they're already almost there. One more deal, and then yeah, you could be breaking this record of Upstart in 2021 pretty easily. Now look at Upstart, exactly what they did in Q4 2021. Okay, you can see what I was saying in the beginning of the video with SoFi growing the assets. It just doesn't do nothing. Even though the ranking went from 500 to top 50, the market just doesn't care, because you got so many bears out there saying your loans are going to implode, your defaults are going to rise. SoFi has finally listened to the bears, and they are shifting over to the loan platform. Anthony Noto said there's a chance all of our loans could be through the loan platform business. I don't think that's going to happen immediately, but hey, if it happens in the next 2-3 years, you're going to be seeing a extreme premium inside of SoFi's valuation. But guys, just look at the assets and liabilities on Upstart when they hit that record quarter. Okay, 1.8 billion assets, liabilities 1 billion. Okay, this is compared to SoFi's 36 billion in assets. Okay, so you can see assets don't mean anything. Okay, it's all about lower risk. Okay, fee-based revenue, and that's exactly where SoFi is shifting to. And look at the transaction volume: 4 billion in originations Q4 2021, 4 billion in a quarter. SoFi just hit inside of Q4. They did 1 billion, and that's when you saw the stock, move up to the, $16 to $18 level pretty quick, getting out of that $10 level immediately. So guys, look at that. SoFi's at 1 billion. You can see what Upstart was doing at 4 billion in Q4 2021. And look at the stock price, okay? So this is Q3 2021, and that's when they give the Q4 guidance, okay? October, November, December. The stock was right around, $400 when they gave that guidance for the Q4 2021. You can see Upstart right now is trading about 4 billion market cap, but look at that prime year that they were in right there, that Q3, Q4 2021. The company was trading at 25 to 30 billion dollars right now, 10 times higher than where they're at right now. 3 billion straight up to 30 billion inside of that massive quarter. 4 billion originations. Understand the rates were lower inside of the market as well, but you guys get the point. When you get that run rate, 4 billion a quarter. And there's another way to look at the valuation on that loan platform deal, that 4 billion originations per quarter. Guys, look at this price to sales right here, hit 40x, 41x during that prime Q3, Q4 2021, 40 billion. And you can saw the company has right now, dropped all the way down to 6x right now. But understand, before the tariff announcement, they were still back to 10 times sales before the big, tariff announcement started to happen. And that brought them from 10x to 6x. And you can see right here, when SoFi added in their loan platform business, they saw their price to sales jump up to 6.6x. Tariff announcement has kicked in, and they dropped back down to 4.6x. So guys, if SoFi can, surpass Upstart in origination volumes on the loan platform, bringing in more fees, in that, extremely low risk, you're going to see them, get right to where Upstart was, before the tariff announcement, was that 10 times sales pretty easily. And That could come if we see originations, double quarter over quarter from 1 billion to maybe 2 billion a quarter. SoFi will be on the right track to blow out that Upstart Q4 2021 4 billion quarterly. So look, guys, here it is. Upstart origination volumes in Q4 2021 4 billion. They had a run rate of 16 billion. Peak price to sales was 40x. I'm not saying SoFi will ever get that in the future, but you get it. And look at the balance sheet. There was no balance sheet. 1.8 billion assets, 1 billion liabilities. Okay. SoFi is transitioning away from growing that balance sheet dramatically, the speed, because it doesn't do anything. Okay. It did bring in, revenue and money to invest in the business. That is exactly what they did. But now they have so much, business going on, so much market share they've captured. It's time to go to that fee-based revenue and originate for other clients. And then you can see Upstart origination volumes in Q4 2024 still pretty solid right now. Hit 2 billion in originations quarterly. That's a run rate of 8 billion. Price to sales peaked right around 10 times. SoFi hit about 6.5 times. Balance sheet has not changed in 3 years. 2.3 billion assets, 1.7 billion liabilities. Then we go over to SoFi Q4 2021. We hit that 1 billion loan platform originations run rate right around 4 billion right now. Price to sales peaked at 7 times. Balance sheet assets still 36 billion, liabilities 28 billion. So guys, you get the point, okay? You're going to get a premium the faster that loan platform business explodes, okay? Even Upstart right now is doing twice the origination volume as us right now. So we get a 2 billion right away. We're already at an 8 billion run rate just like them. We may get a 10 times sales like they were under, the tariff announcement going away, tariffs getting cleared up. We could be trading at 10 times sales pretty soon. So assume SoFi hits at 800 million quarterly. That's going to be a run rate times 4. That's 3 billion, 200 million run rate for revenue. 3.2 billion times 10 is 32 billion. And then if you take the outstanding shares right around 1.1 billion or so, 32 billion market cap, you're getting a $29 stock right away. And that's if, SoFi can get to the loan platform business originations that Upstart was just at of about 2 billion a quarter. And look at the deals that SoFi has announced, $10 billion worth of deals. Some of them over 2 years, but I think it's a matter of time before SoFi can get to that 3 billion. And then who knows, maybe by the end of the year, Q4, beginning of 2026, they're at the exact same thing that Upstart was at, 4 billion quarterly originations in 2021, 16 billion run rate, okay? It could happen very, very quickly. You've already seen them close the deals. Imagine one more deal they close at 7.5 billion or 10 billion. It's gonna be a bigger company than Upstart in 2021 on origination volume, low risk, fee-based revenue, guys. Absolutely incredible. The speed at SoFi has brought this product to market. They have listened to the bears. They're finally going away from growing that balance sheet, that risk, because even though they have executed on flawless banking execution, growing their balance sheet correctly, the bears just don't stop with the 10 to 15 bearish headlines per year of defaults rising, balance sheet imploding. It just will not stop. So SoFi has had to make the shift, for investors, and I believe this is what they need to do to get the stock price higher. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. We're going to keep you updated on all the breaking news with the SoFi stock. Be sure to smash the like button, drop a comment, subscribe to the channel. We'll be keeping you updated daily. Hope you have a great day.